Hello, everyone. Welcome to ELI, the only podcast in India where we bring a new founder on every episode to talk about their journey and their story of entrepreneurship. And today we have with us Nupur. She is the co-founder of CarePay. Hi, Nupur. Welcome to ELI.
Hi, Priya. Great to be here.
To start with, Nupur, can you tell us a bit about your background? Where did you study? Where did you, grow up? uh, which all places did you work for, and how did you sort of arrive at entrepreneurship? I understand this is your second venture, so can you take us through your life's journey and different
Sure.
success and failures along the way before founding CarePay?
Sure, Priya. So really great to be here. And I will start from the very beginning, giving you my educational background. So I'm a chartered accountant by my education, also a graduate from SRCC. And prior to this, I've spent over 10 years in the corporate and startup ecosystem. My initial first stint was with a Big Four, where I worked with KPMG. I was actually part of their CFO and their audit advisory arm, and particularly working with on the CFO advisory side with companies ranging from turnover of 2 crores going up to say 40 odd crores. So I had a very diverse experience and very rich experience at that. Spent about 5 odd years there. Then I had a brief stint at Unilever. So they have this program called UFLP, Unilever Future Leadership Program. It's an accelerated growth path to become one of the CXOs of Unilever in, say, about a decade. I was a part of that program and spent some time there, but very quickly realized my passion for solving real world problems. And at that time, that Unilever was not really fitting in. So I moved out and was in touch with my co-founder, who is also my co-founder now, who was building something in the healthcare space, which I found it to be very interesting. So he was basically building a company to solve for the digitization as a problem in the healthcare ecosystem, which is a very big problem, continues to be a very big problem today as well. Almost 90% of the healthcare data today in India is not digitized, which leads to a lot of downstream problems. And the number is also not very encouraging even now. So it was a very interesting problem to solve for. So I actually came on board, joined him as one of the co-founders, started building that with him. And interestingly, we launched this product, I think right before COVID had hit India. And the tool was very simple. It was to help doctors digitize their OPD operations with a special focus on helping them create digital prescriptions, which today doesn't happen a lot, right? You have a lot of handwritten prescriptions. We don't have digital prescriptions. So that was the core product. And we launched it 2 or 3 months before COVID had hit. So in terms of I think timing, it was sort of right because there was a lot of acceptance for digitization from the clinic, from the doctor ecosystem, which was generally not there before COVID. So we scaled it up quite well to about 25,000 odd clinics across the country. To put things into perspective, that is actually 2% of the overall healthcare
Wow.
doctor market in India. So we scaled it up quite well in a span of 2.5 years. And working with doctors day in and out, both my co-founder and I, we used to go to clinics, sit down with them, understand their issues. And interestingly, while working with these doctors, we came across the problem of healthcare financing, which we are now trying to solve with CarePay. So 80% of our user base were actually specialists, the likes of gynecologists, dentists, oncologists, orthopedics, and so on. And very interesting insight that had come in from them, which led us to the discovery of CarePay.
Okay.
Yeah.
But curious to know what happened to the other venture. Quite good number of clinics were onboarded, 25,000, 2% of the clinic base in
Yeah.
India. What happened to
Yeah.
that?
I think monetization was a bit of a challenge there because it was a SaaS tool, so to say, where the doctors would use it to digitize their operations. But however, in India, SaaS, and nobody really wants to pay for SaaS, and especially when it comes to healthcare. So
Yeah.
monetization was a bit of a challenge. Although we did have an alternate method, which we discovered, where we were monetizing our platform not through the user, not through the doctors, but through the pharma companies that we were working with.
Mhm.
So we did that. So it continues to run at a slow pace today.
Understood. Uh,
Yeah.
Tell us a bit about CarePay. what is the fundamental thing that you are solving? Like when you say fintech, it can mean a lot of things. It can go into lending, credit, uh, etc. So, which part of that are you solving?
Right, right. So let me deep dive into the actual problem that we identified while we were working with these doctors, right? So the interesting insight that had come in from these all of these specialists are that 6 out of 10 patients, they end up delaying their treatment, their secondary or non-emergency treatment, right? Which is a very big number. Like even if it is a non-emergency treatment, you still require it to improve your quality of life. However, for some reason, these patients were delaying it or completely dropping out of the treatments, right? So we tried digging deeper from a patient standpoint to understand this problem. And turns out that almost 95% of these patients are very high intent patients who want to get these treatments done. However, because of the fact that these secondary care procedures are not covered by insurance and they are of high ticket value, which could also impact their liquidity, they end up delaying it. Right. So, and I mean, this struck like really hard with both of us, both my co-founder and I. And we realized that in a country like India, where almost 7 out of 10 iPhones are being bought on EMIs,
Mm,
and it's so easy to get your say TVs or your phones finance. The same is not the case when it comes to healthcare services, which
right.
is a which is not shouldn't be the case, right? It should be easy to pay for your healthcare treatments. If you have a toothache and you want to get your root canal treatment done and you don't want to get an implant, it should be as easy as buying say an iPhone or a TV. So
Mm,
that is the problem that we identified. And if we zoom out a little bit to understand how big this issue is, so see, as per Niti Aayog, Indian healthcare market is about 370 odd billion dollars. And although a lot of great work has been done by the government on the insurance side to be able to increase the penetration, we still are a country where the insurance penetration is extremely low. Almost more than 50% of our healthcare spends are still out of pocket, right? And if we just double click on this out of pocket expense as a category, there is $40 billion of just secondary care treatments and high value drugs, which we are paying completely from our pockets. And even if you have an insurance policy, because it is very hospitalization first, these treatments are not covered. These are daycare
mm,
procedures, the likes of say IVF treatments, dental, dermatology, cosmetology, ophthalm, orthopedics and so on, right? So even if you have an insurance policy, these treatments would still not be covered, right?
mm.
So there this problem is very, very significant, and 99% of these treatments are completely out of insurance. So that's what we are solving for, to be able to make these treatments affordable in a way that you don't have to think twice before getting this treatment done.
Understood.
Yeah.
The other thing that comes to my mind, so these are the treatment which has a scope to delay and insurance companies are not covering. Why would someone go to you versus a bank who can also give them some loan, probably at a lesser interest rate? Uh,
Right.
what is your
Right.
advantage?
Oh yeah, so very very interesting and I think great question. Like, why can't you just use your credit card or go to a bank and get a PL, right? So very simple reason why say a customer would prefer us, and what we're solving for is that our financing option is completely zero cost. So, for example, if your treatment costs say 1 lakh rupees, you now have to pay that 1 lakh rupees over a period of time, say 3, 6, 9 EMIs with no additional cost, no interest, no processing fee whatsoever. So
Mm,
that's where it becomes affordable, where you don't have to take a personal loan or you don't have to really pay in terms of interest or processing fee for this, as against credit card or as against say a personal loan, where you'll end up paying anywhere in the range of 20% going up to 36% per annum
mm,
in terms of interest, right? And second is that we are present at the point of care. So, right where you need it, you're at a clinic, say one of our network clinics, you would see a CarePay QR code. You simply have to put in a few details.
mm.
And after those few details, you will get an option to finance your treatment. And it happens in a matter of minutes, completely digital process.
Okay.
Yeah,
What if somebody has taken a loan from you and doesn't repay, which comes in the category of defaults? How do you handle
right.
defaults?
Right, right. So I'll tell you how the product really functions, right?
Sure.
So just from a journey standpoint, as a patient, if you're going to one of our network clinics, you would simply see a CarePay QR code, scan the QR code in case you're finding it difficult to pay for the treatment, fill in a few details, and do a couple of steps, which includes a mandatory eNASH. eNASH is basically an auto debit system that you are setting up for the repayments that needs to happen, and do an agreement signing, and you will avail this facility from one of our financial partners. So we have in the backend, we have multiple financial partners, which are basically RBI registered banks and NBFCs who are underwriting this and giving this loan facility. And the moment that is done, the loan amount is disbursed directly to the clinic, right? Now,
Okay.
in case of a default that happens, that is completely responsibility of us and our financial partners. The merchant or clinic here they do not have any role to play. So for them, it's a simple payment option that a patient has availed. And we have a mandatory eNASH as a step. So 90% plus collections actually happens through that. So it's automatically deducted from your account.
Understood.
Yeah.
Also wish to understand how do you make money as a venture? Like, I understand there is no processing fee, and for a good amount of, tenure, what you call as moratorium period, you don't have to pay anything before the interest start coming in. So, can you describe how do you make money?
Yes, of course. So it's a subvented model. We don't charge patients, but we charge clinic a subvention fee, which is basically a flat fee that is charged upfront when we are disbursing this treatment amount to them. So why would a clinic pay us? I think that is what you would ask, right? So, see, for a clinic, the 6 out of 10 patients dropping out or delaying their treatments is nothing but a loss of business, right? These treatments are typically of high ticket value, anywhere ranging from 40,000 going up to even 3 4 lakhs. So any patient who ends up not taking the treatment is a loss of revenue for these clinics and hospitals. So because we're helping them convert these patients, they end up repaying us. So that's how the model is structured.
Got it.
Yeah.
And isn't it something like, what Swiggy's or Zomato's do? They have a separate price for offline customers, and when they are selling on Zomato, they inflate their prices. Do clinics do the same thing with you?
No, actually, see, first, we would not have 100% visibility on it because by design, you don't have rate cards in a clinic or a hospital, right?
Correct.
But the short answer to this is no, right? I'll tell you why. If you look at healthcare and look at secondary care as a category, which are these daycare procedures and treatments, they typically are on high gross margin. They run on a high gross margin, right? You have a almost 70% gross, 60 to 70% gross margin on this. So there is ample in terms of the margins that a clinic or a doctor has to be able to give this. In fact, today, if you go and you tell a doctor that, okay, I will think about it, I will come for my aligner treatment after a month, there is a high possibility that they end up giving you a discount upfront. They would say that, okay, take a discount of 10% or
Mm.
20%. Now, in our case, that 10-20% is now basically, being replaced by a subvention, which is lesser than that. So it becomes a win-win for both the patient and the clinic.
Understood. Uh, Help us understand the underlying technology behind it. Like, how do you prevent fraud? How do you make sure there are genuine transaction happening and not, healthcare is known for, finding loopholes in the system. Happens a lot in insurance case where, hospitals make false claims, get the money, you know, take a share from that and give rest to the patient. So this is a well-known practice in India. How do you
Yeah.
ensure that such frauds do not happen with you?
Yeah. No, you're absolutely right. There is definitely a very high risk when it comes to healthcare and working with hospitals and clinics, right? And we also learned this very early on because it's been about what 6 odd years now that I have personally spent in healthcare, and we understand how clinics and how hospitals function. So very early on, say 2.5 years back, when we were just starting off this venture, we realized that merchant risk or the clinic or the hospital risk is of utmost importance, and you need to be very sure of what kind of clinic or hospital you work with. So what we did was we created a very smart scoring system for these clinics and hospitals, wherein we take into account multiple parameters, not just financial, but also non-financial, including their verification of their medical license number, including how what kind of reviews they're getting on different platforms on Google, etc., and certain other financial parameters. We take into account all of those things and the location score, etc., and come up with a score, which we call occurrence score internally. It's
Mhm.
actually an AI based model that runs. It takes about a minute and some data points and comes up with a score out of 100. And out of that 100, if the clinic has a score of more than 70, only then we actually work with them. Otherwise, we do not work with them.
Mhm.
The objective of doing this scoring is only to prevent any sort of frauds that usually happen, right? So if you're working with a quality clinic, then those frauds can be prevented to a very large extent. And this is what we do on the merchant or on the clinic side. But on the patient side as well, when the borrower is coming onto the platform, there are certain details that are asked that are also verified through various APIs and data sources
Mhm.
on a real time basis. And basis that only a loan is given. And every treatment that is financed is actually backed by an invoice. So there has to be an invoice which clearly states out that this so and so treatment is being taken by the patient. This is
Mhm.
what it costs, which is given to us directly by the clinic.
Understood.
Yeah.
Uh, what about credit worthiness? I mean, of all the, let's say, 100 people scan your QR code, you would not pass the loan to every 100 people, everybody of them, because some
Right.
of them are not able to pay back the money. They are just simply not worthy enough, don't have the income streams or something like that. How
Yeah.
do you judge that?
Right, right. So, how we have structured our platform is that on one side we have these patients who are coming to us and asking for a financing option, and on the other side we have multiple financial partners that we are working with, which are basically RBI registered NBFCs and banks, and they have different policies in place. So we have two stacks mainly. One is on the NBFC stack, where every NBFC that we're working with and we're deeply integrated with, we have co-built a credit policy wherein certain parameters, including their bureau, including their employment details, etc., are checked, and basis that we assess if they're eligible for this loan facility or not. And on the bank side, we're doing a couple of things wherein we are also, if you have a credit card, we could actually convert your credit card line into a zero cost EMI. So we're doing that where we have 14 banks on that stack. And we
Mhm.
are also tapping into a pre-approved line. So for example, if you are, let's say, an HDFC customer and you have a pre-approved credit line with HDFC, we would use that to underwrite it. So in all of this stack combined, we end up almost approving 6 out of 10, patients who are coming onto the platform filling in our application. But
Got
four still continues to remain sort of not eligible because of the credit worthiness reason.
understood. Uh, what other use cases of AI? So I understand the two examples you gave about fraud prevention and credit worthiness. They're all powered by AI.
Yeah,
What else are you doing with AI? I think AI is a buzzword. Every company is, using AI for different use cases. Can you tell
right.
us how you have been leveraging that?
Right, right. No, absolutely. So, in fact, we have integrated AI in most of our workflows when it comes to our product, right? One, I told you about the Oculus score, what we are doing on the merchant or on the clinic side. Similarly, we have done something on the onboarding of the patient side as well. So, we actually recently launched this product called Karina. The name Karina actually is a short form for Care Engagement Assistant. So, as the name suggests, it is basically an AI agent that helps in the onboarding of the patient. Wherein what we have done is we have decreased the TAT or the turnaround time for the patient scanning the QR code and getting the loan offer, right? So we have decreased that significantly to less than 30 seconds. And the data also that we are collecting is 4 or 5 data points basis which we are able to assess and tell the patient that if they're eligible for the loan or not. And even on the post approval journey, it's like a personalized approval journey because we have integrated AI on that as well. So it becomes a personalized journey for the end borrower. So overall, from a customer experience standpoint, it becomes completely seamless, like a checkout product of sorts, in an offline setting.
Understood. Uh, Tell us a bit about the embedded financing, like the QR code. I think every fintech company is now coming up with different ideas to install their financing options at the point of contact. Like hospital is just one example. It's happening with the Paytms and Phone Pays of the world, the payment ecosystem, the lending ecosystem, insurance ecosystem. You see insurance company inside the car showrooms. That's another example of embedded financing. It's happening pretty rapidly. Every company is, sort of embedding financing at the point of delivery or at the point of contact.
Right.
What is your thought on that? Like, uh, is it the future of finance?
Yeah. So I think very early on when we were ideating the product and we were thinking about how to solve for this problem, we were thinking very first principle basis that how the product should be built out and how you can make it easy and be present exactly where you need it, right? So
Mm,
that's how the whole journey for us at least started when it comes to the whole QR code journey. That if you can make it very seamless and simple and be there at the exact point where a patient would need it and not when, let's say, the patient has gone back home and is trying to discover you through an app, then it becomes a very good win-win for both the merchant and the patient. So that was our thought process when we started off, and
mm,
that's why we have that CarePay as a QR being present at the point of care. And of course, I mean, generally speaking, for the ecosystem, this works out really well. If you are there where exactly it is needed, I think the conversion is higher, the scalability is better.
got it. What about the future? Like, you already have a good product, you are expanding now. Um,
Yeah.
what do you have? What are the different plans that you have for future? Like, are you going to expand, just keep on expanding geographically, or are you going to add more products or features, go into other
Right.
segments of healthcare, or go into other segment of finance? Which direction are you headed?
Yeah, yeah. So yeah, great. No, definitely, financing is just one aspect of what we want to do. And today we have close to about 2,500 odd clinics on our platform who are actively working with us. We want to expand this network significantly to reach a number of 10,000 plus in the next, say, 1 year. And while we do that, financing is not where we want to limit us. What we have realized is that financial services and payments in general within the healthcare setting is completely broken, right?
Mm,
It is not just out of pocket, but generally healthcare payments not very structured within the Indian context, right?
right.
So that's where we want to expand. We actually want to get into payments as a whole, and we want to be synonymous to CarePay should be synonymous to healthcare payments. So anybody who's thinking about paying for healthcare, be it through insurance, be it through, be it through UPI, be it through lending, CarePay is the name that needs to pop up. So that's a long-term vision for CarePay.
Understood. So you'll grow more into the healthcare side in the future.
Yes, more on the healthcare, more on the payment side, and increase our wallet share and solve for the clinics.
Got it. And
Yeah.
is it going to get some merging with the other SaaS that you had built? Like, are they going to work together in future or something like that?
So even today, what we are also doing, interestingly, is that like I quoted a number, right? Like we are still able to serve, say, 6 out of those 10 patients who are looking for this option, but there are four we're not able to serve, right? Because of some reason related to their credit worthiness, etc. So there, what we're trying to do is we are actually, and it's a long-term thing. It's very ongoing. It's been happening the last 1 year, and we'll keep revising that model over the next, say, couple of years. What we're trying to do is we are trying to incorporate a lot of healthcare data points. There are 70 plus that we track today. And
Mm,
we are trying to come up with a better scoring mechanism, even for the end borrower. If we can also underwrite somebody who's not maybe as credit worthy from a financial standpoint, but from a healthcare standpoint, makes a lot of sense to go ahead and finance that borrower. So we are doing something there as well to be able to increase our overall approval rate at a merchant level. So, and we've seen some interesting correlations also. We don't know the reason yet, but we have seen very, very interesting correlation at a specialization level. Like, for
mm,
example, in case of IVF, we saw that the default rates are generally very low.
mm.
And even if you go ahead and approve not so credit healthy profile, the defaults are still extremely on the lower side. Now, these correlations is something that is coming in from the data that we are capturing. We don't know the reason yet. So, you'd want to build a model on top of all of these data points to be able to serve that.
Interesting. All right, so almost done with the interview. Just one last question. What do you understand about entrepreneurship in general? Like, how would you define entrepreneurship? Uh, and how would you advise others to approach entrepreneurship?
Yeah. For me, I would say it is about creating an impact with what you're doing, right? So, and it is not an easy journey for anyone. I think you're an entrepreneur yourself. You would know this quite well, right? So there are a lot of ups and downs, and a lot of times, founder's life is glorified and it looks very glamorous on the outside, but it is not the case when you're actually doing it. So for me, it is about doing something that you truly believe in, and your ultimate goal is to create a large impact. So that's what it is for me.
Fair enough. All
Yeah.
right. On this note, we will close the session. Thanks for joining us, Nupur. Pleasure talking to you. And I think you're doing a great job, by digitizing and financing the whole healthcare journey. So kudos to you.
Yeah, same. Great chatting with you, Priya.
Thank
Thank you. Thank you for having me.